The greatest explosion blow off is about to start. Now, here's the thing about these markets, okay? I want to walk you through why I said that, what I've been saying, and what I'm doing myself right now, what I'm investing in, and what I'm doing right now myself, so you can see what I'm doing and how I'm viewing these markets. Firstly, I want to put aside here one thing. People think I got comments recently asking me about, am I short gold? No. Why would I? No. You don't short a big bull market. Gold and the mining sector are still in a very big bull market, right? Some people have been asking me about that. I'm just expecting more of a pullback, but we're still in a very big bull market. So no, I'm not short gold and mining sector. I'm actually still very long for investment wise. I'm long, right? I'm actually bullish, right? I see gold going to 10,000. Let's just put that aside, okay? So no, just because I think the market's going to correct, and it has been correcting, right? As you know, gold is down 10%, and mining stocks down right now. Mining stocks, ever since me saying this, mining stocks are down now, 20%. So no, I am not short a very big bull market. All I was calling for was a bit of a correction, which we've been getting. So I was right, okay? But I'm not short. I'm definitely not short. If you are short a big bull market, you're a moron. You are going to get run over. Now, you might be right every now and then, but 80% of the time, you're going to get run over. Now, here we go. Back on to what I was saying before. What happened with Jerome Powell just recently? What did he do, right? What did he do? He do what? He came out and he said what? We're stopping QT, right? Now, if you actually read between the lines, and I've done a lot of study recently through Paul Tudor Jones, Ray Dalio, so on and so forth. And if you actually read between the lines, what does that mean, right? If you actually understand what that means now we're not tightening. There's going to be QE. In fact, QE has already begun. QE is already happening. Did you see the injection into the banking system just recently? Oh my goodness, right? So this it hasn't stopped, right? It's just going to be QE is back in town, right? QE is back in town. Now, what does that mean for the markets? Firstly, let's actually put this in market perspective here. Why did I title this video why did I title this video what I titled it? I titled it because of what? Exactly that. They're cutting rates right now, and the market's at all-time new highs. 1. QT is now stopping. 2. QE is back in town. 3. Right? So, if you look at this whole thing, this is now, it's just like, we're already very, very, very high. This is now really, 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 really close to it. And if you study the legends from Ray Dalio, Paul Tudor Jones, so on and so forth, you'll see that's the. If you actually check out these people, you'll be able to see that they're saying the same thing as well too, right? This is where I've learned a lot of stuff here. You'll be able to see this here. So we are about to experience one of the greatest blow-off opportunities we've ever seen here in the markets. And Ray Dalio and even Paul Tudor Jones, they both have said this is like 1999 all over again in the markets. What happened in 1999? Right? Let's go back to here. 1999 was where? This point through here. Right? So, 1999, and we saw this big hockey stick, but then we came through here, right? So firstly, probably for the next 6 months, we could be getting ready for a really, 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 really big move. We're talking the classic melt up, right? The greatest explosion we've ever seen is coming. Now, on the flip side of that, don't be too greedy, because guess what? They're going to start tightening again, because it's going to be coming, and then it's going to prick the bubble, then it's going to be a crash. Now, for you guys that really want to help and a helping hand through this entire process, through this big bull market and through the crash, then make sure you go check out that third link in the description, or go to getjohntop.com. That's a link to my 1% group. And the 1% group is a really small group that I take on every single year for 1 year. And I'm with you every single day for an hour or so, showing you what I'm doing, coaching you and helping you. So if you want help for a whole 12 months through 2026, then go check out that link in the description there, where I'm with you every single day. And I call it the 1% group because guess what? Most people in that group right now, guess what? They're achieving what only 1% of people achieve out there right now. Okay? So that third link in the description there. But we're looking at this level from here. So firstly, we're probably going to experience a really, really big blow off top. Okay. Now, blow off top doesn't mean every single day. It's an overall thing, right? Let's go back to here. Let's go back to where? This is a weekly chart. What does a blow off top mean? Right, these are monthly bars through here, and you see how they've gone up through there, right? But we do get what? We do get down months, pullbacks. There's a correction, right? But eventually we get to what? So we'll probably experience this, and there's going to be a lot of people that's going to make a lot of money, and there's going to be people that are going to get absolutely destroyed from here. That's the first thing here, right? The greatest explosion is going to come. Now, but FYI as well too, guys, this could also be really, really, really bullish for gold as well too, right? So what I've been calling for with gold is exactly what's happening right now, which means what with gold and silver. I'm just calling for a correction, for it to have a nice big correction, and that's exactly what we're getting. I'm still expecting more of a correction for the next couple of months. The correction is going to continue, but then this may be very, very bullish for gold as well too. But FYI, guys, if you guys watch some of my videos, probably you haven't. I did a video a couple of days ago why I actually expect to see gold at 10,000. So for the next 5 years, I actually see gold 10,000, right? So people think that, again, it's just crazy. People think that I'm actually short gold. No way. You never short a big bull market. Just because I'm expecting a correction, you don't trade that, right? That's just nuts. So the greatest explosion, the blow off top we're going to see is along the way. That means also what? Not only the NASDAQ, but all these markets are probably going to get ready for really, really, really big opportunities. And this is where not only this, but individual stocks as well too. There's going to be so much opportunity out there right now. And if you don't even know what you're doing, if you don't even know what to look for, then guess what, guys? That second link in the description there, that's a free training. It's a 20-something minute video. I walk you through my number one trading setup for free. So go get access to that. Or if you want to get access to my book that I'm giving away, more about the mindset and so on and so forth, that's that first link in the description, based on Jesse Livermore, W.D. Gann, and so on and so forth. It's a brand new book that I put together, and you can see it. That's that first link in the description there. But get the help you need, right? I'm giving all this free training away. So get the help you need, because there's so much opportunity that's happening right now underneath your feet. Unfortunately, do you know right now there's individual stocks that are setting up with beautiful, massive, high probability, A quality plus trades that are getting ready to trigger and confirm, that have a massive probability of achieving a really big result. But the thing is, do you know what you're actually looking for, or are you just trying to? See, I trade based off systems and rules, right? What I mean by that is that even though I think something's going to happen, I don't trade based off that. Now, here's what I am doing, and here's what I have done for quite some time, and I've talked about this before, is TMF. Let me bring on the line chart. This is a line chart here, a weekly line chart with TMF, and I've said now probably for a month, probably for the last couple of months, and I have already invested in this, is that I have been expecting to see a shift coming in place. I didn't know what was going to cause it, but I saw the interest rates starting to come down into next year, which is going to cause the bonds to start to have a good rally. Now, that's just the cycle we're in right now. Everything just goes through cycles, right? Yeah, and this is what I've already done. Now, listening to Ray Dalio and Paul Tudor Jones and these really successful people, and start to connect the dots with Jay Powell and what he's doing, QT, QE, and all that sort of stuff. You know what that means, right? Buying bonds, bond market rally, which means what? Lower rates. So the rates are likely to come down for short term, right? And when the rates come down, that means the bond's going to rally. That's why I've already invested myself. Yes, I have. I'm not short gold. No, I'm actually long gold and silver. Gold, silver, the mining sector. I'm actually long that. Investing purposes, guys. I've been long for years. Like, don't get muddled up from a short-term correction to a long-term bull call. Okay. Some of you guys don't even know the differences. If I say there's a correction coming out of gold, and we could see a good 10, 20% correction out of gold in the mining sector, maybe 30% correction, that's just a correction in a very big bull market. If you're an investor, you don't give a shit about that, right? But that's for trading purposes, right? Now, here's what I do say. I see that TMF is likely to rise because what happens when they print money? They buy bonds, interest rates go down, bond market rally, right? And we're in that stages. Now, again, for me, through this here, I didn't know what, but for the last month, I've been investing in TMF and I've got options in TMF as well too for the next 12 months, and I expect to see that to rise. The cause-effect relationships that I've learned from Ray Dalio is what? The effect is I actually see the bond market rally, but I didn't know what was going to cause that. Now, the cause is what? As of probably the start of next year, the Fed's going to start to do their thing, and you're going to start to see these things start to slowly unfold. Big melt up in the stock market. Maybe gold and silver in the mining sector are ready to go for another big move. They've already gone for the really big correction. That's already been happening now, right? So I was right about gold, silver in the mining sector. We're in the correction. We've got the correction. We're in the correction right now. Okay? So, but maybe next year, we start to see another very big bull move, right? We just need a bit of the thing about gold and silver, guys, is about cooling off, having a bit of a resting phase. It needs a bit of rest first, and then we see a big move. Stock market melt up, and TMF melt up from here. If we have a look at the actual interest rates though, what I'm expecting here, guys, by the way, this is the interest rates here. This is the 10-year. What I'm expecting to see is what? I'm expecting to see the rates come down through to here somewhere, right? From that low to high, possibly around the 50% level through there. And then guess what? Then that there is probably going to be, probably metals, miners go crazy as well too. Stock market, big blow off top. Bond market rally, all that sort of stuff. Then after that, the Fed's going to start to tighten. And when the Fed tightens and we have we're already in a bubble right now. So this whole fueling of the bubble right now is going to just create a very big bubble. What happens with very big bubbles? We're talking about like 1987 style of crash. What happened in there, right? Do you guys remember there, all right? What happened in 1987? Let's go back to here. 1987. Oh, it's not allowing me, is it? I'll go back to here. There we go. That's 1987 there, right? This here is what I'm actually, if this is true, we're probably going to see something like that. Then guess what? On the other side, this is where for you guys, if you guys want to participate in it, one, it may not work out, right? So always have good risk management, guys. I know you hear that, but you don't listen to it, right? There's no guarantees of making money in trading. You guys are trying to be right and wrong. Anyway. So on the other side of that, when the Fed stops doing that and then they start to put the brakes on again, they start to raise interest rates, guess what? Then we're likely to see something like that. There's going to be a big crash. And unfortunately, some people are going to be missing this blow off top. Then when the blow off top's happening, then the whole public's going to get involved. And when that happens, that's the top. You see it all the time, right? You see it all the time. And then guess what? And then we're going to continue up from there. So for the next 6 months, and once again, if I go back to here and I go back to say the rates, this is the long-term rates here. That's the 10-year and this is the 30-year. What I'm expecting to see through this process is over the next 6 to 12 months is we have the rates come down through to here somewhere, but it's not going to come down to here, right? This whole sort of 3% level on the 30-year is equilibrium. And then we're probably going to see a rise. So I see an overall very big bull market, which is swings, ups and downs, right? Just remember, guys, when someone says there's a very big bull market starting, what is a bull market? It's higher lows, right? Low and higher low and higher low and up and down, high, low, higher, high. No, John, tell me something new. Well, if you know that, then what is this bit through here? That is what? The market coming down, right? What does that mean? Red candle, red candle, red candle, red candle, red candle. Oh my goodness, market's coming down. Yes, but it's in a big bull market. Market has to come down to what? Form a higher low. This is where you shouldn't be focusing on the legs, ups and downs. You should be focused on the trend. Where's the trend? Because a lot of people think the market's going down. Oh my goodness, it's over. And then suddenly, no, but the trend analysis there. So that's what I see from there. Once again, then if I go back to TMF, that's the reason why I've got this line through here, 2027. Because all I'm expecting is I'm expecting to see this thing to rise. And then on the other side of 2020, then we're probably going to get crushed, right? So the TMF call, the reason why I've invested in TMF, and again, guys, I've invested a portion of my account. Not my entire account, right? No. But a portion of my account. because I can be wrong, right? But there's a massive probability of this working out. And so with everything that's happening right now, guys, the greatest explosion blow off top is about to start in the equities. Maybe after this cooling off period for a few months in gold and silver and mining stocks, resume of that as well too. Interest rates come down, bond market rally, but after a good 6 or so months of this blow off top, guys, get ready for one of the greatest crashes we've ever seen in our lifetime.